What if I told you that the jobs numbers and employment data wasn't accurate at all? And what if I told you that the consumer was actually in dire straits? That's what we'll get into here. I'll break down every single aspect for you. I'll make it real easy. So stick with me. Let's begin. Payrolls increased 528,000 in July, much better than expected, a sign for strength in the jobs market. Great, fantastic. Markets were kind of mixed by the end of the day, but it seems like they loved it. They expected one thing and they got even better. You could see that the unemployment rate measured by the U3 has also fallen to 3.5%. But there's something very unusual about this data. You have to break it down a little bit further and start to make sense of it. So I'm going to show you where the anomalies are. I did a video about this 1 month ago when we got that data out, and I showed those anomalies. And here it gets even worse. So take a look at the chart itself. We don't see these kind of numbers that often, just showing you that according to their data, this has been looking pretty strong. There's no doubt about it. But we have something to look at just one level deeper. And that is when we get this information, are they actually sitting there and counting how many jobs precisely? Of course not. This is based on samples. And so the samples depends on where they're getting that from, of course. Now, if we look at data based on what they would call the establishment survey, well, we're getting one picture, and that's that green line there. However, the household survey, household data, measures different things. I covered it in that previous video 1 month ago. And so what we look at is a 1.8 million difference. 1.8 million jobs difference. Back in March, something snaps, as they say here. So it depends on the source of the data because they are not, like I said, calculating each and every job. Here you can see just a different way to look at the chart form. While the establishment survey shows everything is great, more jobs are being added, the household survey gives us another picture. Now we can see this data, whether we're looking at shadow stats, whether we're looking at one of these other places that kind of retabulate all the information. It's going to show us one number here, one number there. And of course, there's all these estimates and people bend this and twist that. But the point here is the data that we are given isn't accurate. Documented here, and of course, in all my previous videos. I have a video, if you type in fake unemployment rate, the money GPS, I show you why the U3 unemployment rate is not real. Okay, so you can search that for yourself. We have this. You look at the Federal Reserve and their intentions. Understand this, because this is underlying the reason why I'm covering this right now, which we'll talk about more towards the end of this video. It's that if the economy, according to their figures, is strong, the jobs numbers doing well, stock market doing good right now, and you look at all these other things, inflation is too high, everything on top of it. Well then, why is the Fed going to pivot? That's the question. Why are they going to pivot? Everything is good, according to the data that they use. So essentially just showing you here that the FOMC is to slow the pace to 50 basis points in September, 25 basis points in November and December. And I've talked about this before. I do believe that that's accurate for my base case, but we'll see. Okay. One of the factors that we look at is what's happening with part-time versus full-time as well. And you could see that full-time jobs, according to that household data, has declined. Okay? A lot of full-timers. We need to see this as well as something else. Multiple job holders. People that have not just one job, not just two jobs, but potentially more and more and more. And these numbers continue to go higher and higher and higher. Now it shows you something. If an individual can get two jobs, it means that there are availabilities. There are businesses that want to hire people. Some are working two full-time jobs. I've seen this myself, people doing that, two full-time jobs. I mean, they just work all day, go from one job to the next job, and they do two. It's certainly difficult, putting in a lot of hours. There's a lot of burnout there, but this is what happens. People need the money, and so they do so. So anyway, you could see that this is going to throw off the data. Because if you have two jobs or three jobs from one person, that looks like three jobs. But in reality, it's one person. Okay? That's so key to understand. And by the way, are you subscribed yet? If not, you've got to do so. Just hit that subscribe button down below because I'm going to bring you another video right after this one that you definitely want to check out. So hit that subscribe button. Take a look. Job changes March to July. And so you could see this plotted out here on this chart. It's just interesting to me to see it all in the different way that they do this, giving us an idea of, yeah, the data actually shows that full-time jobs, part-time jobs, they've been down from March to July. However, multiple job holders are up. You could see multiple job holders, both primary and secondary job is full-time. So that's just giving us another level at a record right now. Can you believe that? So the people are working two full-time jobs at a record high. This chart goes back to the year 2000. So we have never seen this going on. It's not as if, hey, they work, at one place and then I'm just gonna, do a little Uber here and there just to make some extra cash. We're talking about full-time jobs here. And then it just breaks it down a little bit further. Wanted to just highlight the fact that this yellow orangish area, that's the bulk of where the jobs were added. And as expected, it is services, lower paying services specifically. Okay, so it's not fantastic jobs that pay a lot of money that will help the economy. It seems like it will be those lower paying jobs once again. And here we have the labor force participation rate. While it was increasing ever since dropping dramatically during 2020, that has started to come back down. So the jobs numbers as a whole are not what we're being told. Okay? Simple matter of fact, documented 1 month ago, documented in my unemployment, fake unemployment video, and here yet again. Now, the next aspect here, what is happening with the markets? What's happening with the consumer? All of this we will cover right now. U.S. consumer borrowing jumps by more than $40 billion. That's the second most ever. Increase led by a record increase in non-revolving borrowing. People are using their credit cards more than ever before. Vehicle loans rose about $32 billion as well. So here we go. Let me show you some of this chart form. Look at it. Credit outstanding. Looking at how it's just going up and up and up and up. So while we did have a period of time throughout 2020 where people were paying that down, they were getting the checks, they were throwing that onto their credit card, they weren't going out and spending that money, so they finally had, a reason to pay down their credit card. But we have this rising dramatically. At the same time, you've got savings getting absolutely pummeled. Take a look here. This is just showing us consumer credit total net change, second highest ever. My goodness. And then we have this Federal Reserve, consumer credit, non-revolving net change. Unbelievable. Highest we will see. Looking at this is really what I wanted to wrap this video up with. Okay, real quick. Larry Summers, that is, warns the Fed on 1970 style mistake with CPI set to slow. And essentially something that I have talked about over and over and over again. And that is if we start to see inflation coming down a bit, the Federal Reserve takes its foot off the brakes, I guess it would be. They stop doing this. They stop increasing as much. What happened in the 1970s? Well, of course, you had another surge of inflation. It was even worse than the time before that. Then you had to get Volcker in, and he went totally berserk on the interest rates to slow that down. Do you understand what's happening here? Do you see this? We cannot understand the Fed at face value. We can only watch as it happens. Let's keep an eye out. Now I wanted to show you this. This was 1 month ago. I was talking about the fact that you could see stair stepping down. This is the S&P 500. And just showing you that on a technical level, this is my quote, on a technical level, we are way oversold and overdue for another rally. None have been sustained though. Yesterday's post-FOMC rally didn't even last a day. So at this point here, it started to turn around somewhat. I don't know if that was the exact day, but you just look at that and have to understand what's happening fundamentally. Traders are simply saying enough is enough. We don't want to sell. We want to buy. YOLO stock bulls say wake me up when the Fed tightening starts to bite. So initially this was fear, but who cares? In fact, the financial conditions index right now today is looser than where it was when the Fed began to tighten. Can you believe that? Just this small amount, just this short period, and already we have changed. And what about this? AMC jumps 19% after, quote, apes tout new share class. Whatever. All I gotta say is that we are seeing the same stocks from 2020 being bought up. Michael Burry talked about this, and you will see it for yourself time and time again that people make the same mistakes. Do not try and have a Hail Mary. Do not try and change your life in one day. Slow and steady wins the race. Do the things that make sense to you. Invest with prudence. Educate yourself. The more education that you give, that you take, that you are willing to actually sit down and spend the time doing, better off you're going to be. Okay, don't take people's advice. I'm going to buy this stock. I'm going to buy this crypto. I'm going to do. You got to know for yourself. If you want to be the healthiest that you can be, you don't have to listen to these YouTube channels and books and so on. Study anatomy. Once you understand the human body at its core and you look at what each part of the body does, and you understand the digestive system, and you understand the great lymphatic system and so on, well then you make the decisions for yourself. You see? Oh, that's enough for today. If you appreciated this video, then definitely hit that subscribe button down below, because tomorrow's video, I'm going to bring you some good stuff as well on this, and we'll get into the depths of it all. I'll see you in the next one. Take care.